The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 7th day of August. And very big move in many of the indices. The Dow is up 156 at 25,658. This is now a leg E in the daily chart. There was a Chapman wave falling axe that I thought would stall the market at about 25,420, 25,440. It went all the way to 25,460. So one of our short positions we're out of. We're still short the core position from that reversal on the day after the 25,587 high. Made it a fairly tight stop. We'll see if that stopped out today. One of the things I'm looking at here, I'll do this real quick. I want to go to the technical straight away. In the 120-minute chart, we've got that leg D in Chapman Wave 5 extension that I said is a possibility if there's going to be a spike above 25,540, the higher at peak C yesterday. So now we've got that. And what's really important about this is that the levels of resistance that I showed yesterday, they automatically projected Chapman wave resistance and support levels. The highest was 25,595, 25,593, a cluster there. What is this one here? And 25,578. So we've gone above that in the very short term. That becomes some kind of support. Now, what's really important about this, and what I'd mentioned yesterday is, although we're short in the indexes, there are certain stocks that seem to be holding very well. And in my portfolio, we're actually, all the stock positions are on the long side. And that was what I was talking about when I said we're looking at a market that is really a market of stocks. One of the few times it happens revolves around stock market, and then there's a period, sometimes it's in the summer, sometimes in January, February, where you really have to be looking at particular stocks because the market indices are doing divergent things. So what we're looking at here now is that the Dow has had a very strong move to the 25,692 level so far today. But the stochastic, as I mentioned yesterday, was actually at 91% and good. And that's the reason why I mean, on Friday's move to the upside and then going into Monday, it was incumbent upon me to say, hey, that was 20 to 30 points more than I anticipated in the Dow. Let's just skip those short positions. Let's cover. I probably would have said, let's even try a long position only because it broke it. But I kept looking at those resistance levels. And so far, if you look at them, they are very strong. I wonder if I can just go here just to demonstrate that for a moment. Is it here? Is it here? I don't know where it is. 10 minutes. Let me just go to this 10-minute chart. No, it's not here. Okay, I had it just a short while ago. It was really good, a demo of what I'm looking at. I'll do a couple of these. One of them here. No, it's not that. I just wanted to show you that these levels, these automated levels, can be pretty potent. And that's the reason why I did respect it. There's the S&P and the SPY. And that's our two charts there we're looking at. Now, I'll try to find it a little later on. But most importantly, what we're looking at is, yeah, you can see. So this is the RTY U18. That is there we go, right here. You can see that the 1694 level on the Russell E-mini, the Russell 2000 E-mini, had that as very strong resistance. And where did we go? We went to 1694.00. Now it's saying that whole cluster of 1690, 150, 1690, 121, 1690, 198 is being challenged as we speak. The low right now is 1690, 170. And there are four of them in this cluster. If the Russell 2000 slides underneath it, goes under 1691, that's going to say, whoa, be careful. You've got in the 2-minute chart, look, you had a peak D right there at 1697.30. In the 5-minute chart, you had a peak F at 1697.30. And at 1697.30, you had a peak D in the 10-minute chart. And that just shows you the power of that. Now we're going to see the power of these three cluster at between 1690, 120, and 1690, 190. Is that going to hold and give a nice bounce to the upside? Not only that, the 200-period exponential moving average of 1690, 190 in the 2-minute chart is being challenged. If that breaks down, 1689 is the 5-minute one, and now we're in leg C in the 5-minute chart to the downside. So I wanted to explain that I couldn't ignore it. The fact that it went right through showed the kind of buying power. Now, I also spoke about this yesterday. I said, we'll see if stocks like a Caterpillar, which had just been beaten down, was starting to try to form a base, and today it's up 3.30, up 2.37% at 142.78, helping the Dow. With a Caterpillar, which of course is a very important Dow stock, and Boeing, which has been really key to a number of down and up days because of its weighting in the Dow, and it is up 3.98, up 1.15% to 350.55, still just a bounce within this second cup formation in the weekly chart. I'd say that we'll see if there's a rotation, and that's why I spent a lot of time talking about rotation, because if everything is going down, you get these triple-digit moves to the downside in the Dow, strong double-digit, 15 to 22 points in the S&P, and the NQ. The NASDAQ tumbles as well. But once you get this rotation, it says that one part might be weak, but another part is going to give you a little bit of strength. Okay, so that's really important. That's kind of what I missed. I always like to just say that's what I was looking at, but it was wrong. The Chapman wave falling axe formation in the Dow was the most powerful thing. You can see it right here. That lower highs and much lower lows break out above it. You can go 1-to-1 to the upside. Well, we've just about got there in leg E in the daily, leg E in the weekly. Monthly chart is very good. Leg D in the 120-minute chart we were just looking at a moment ago. And the daily stochastic is only at 76%. On balance volume is good. And the MACD is making the second of the arch formation. This is where you're getting very close to some kind of a pullback normally. Well, I say normally because it might not be. Okay, so now that I've done the Dow, when we get back, we'll just run all the other numbers. I wanted to show you what my thinking was, why we were remaining short the Dow in a particular position, as well as the SMHs, which are actually stalling. They're at 188, 108.30, 108.59 right now. You know, leg E, not that great a move when you think about what's going on. I'll be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So we're looking at the Wilshire 5000. This is called the Wilshire 5000 total market. So it's just all the stocks, right? And the high was made in January, like the S&P and the Dow, at 29,760.60. Trading here as we speak at 29,797. So 797 is 30-something points, 39 points. Yeah, 37 points above the previous high in leg D in the monthly chart, leg E in the weekly chart, and so far I just have no choice but to call this a leg F in the daily. I might call it a leg A. That would say that we've got at least 2 weeks, week and a half at least, of even higher highs, because you still got to go to a B, then a C, and a leg D, peak D, leg E, or whatever it is. So, but it has, look at this, there was a perfect sell signal right there on the 26th at 29,006, on the 25th at 29,651. And it pulls back, very sharpest decline that it had for quite a while, since June. And the MACD went negative, the stochastic went very negative, but then the MACD made this little U-shaped pattern, not a very deep turnaround. So that says that I've got to consider this is still, at this moment, it looks more like a continuation of that up move than a brand new buy signal. I'm just treating it like that for now, because still got to a G, but I've got to watch this very, very closely. Okay, now here we go. S&P. S&P right now is up. The Dow is up 0.66. The S&P is up 0.41. I've got this as well as a potential. Here I could make a case for it being an F/B. All right? And the MACD has turned up again. The stochastic is still under 80% at 79.94, very close to turning positive. At least I like it over 80%. And the on-balance volume is good. Parameters to look for right now, 2872s was the all-time high. We're 10 points below that right now. We got 11 points just today. So, yeah, that's very, very attainable. And it's all part of this pattern that I talked about of a rectangle where a shorter time frame, if you look at the monthly, you've got a rectangle there. In a shorter time frame, in this case, the weekly, you can go to a D or E that takes you toward exactly to or just over the previous high, then you got to be very careful because there's often a very big pullback. So here we are. The QQQ, so support, regardless of where we are right now, 2862, support going into Thursday, 848 to 841-ish. Really is key support to hold. Let's go to the QQQs, which is the NDX 100 trading vehicle. Same thing, leg F, oops. Same thing, the peak E that was made on the 23rd of July at 182.93 had a very sharp pullback. One of the sharper pullbacks it's had goes down to the 174s, 8 points down, and then it rallies up. But so far, the QQQ, the Invesco QQQ Trust Series, is not making a new all-time high, but it's close. It's at 181.83. All it has to do is go to 182.94, and it tackles the left side high, making a new high with a leg E. In the weekly chart, leg E extends in the monthly chart. Key support over the next 3 days is 179.30. IWM. IWM is a very rotational market. Look, the IWM is quite a bit under the high of 170.20 at 167.96. Really struggling. The technicals are really very, the daily technicals are poor. Weekly technicals are turning down, but still okay. Price is good. And the monthly chart is still in that Chapman wave inside track repellent zone, but not breaking down. Parameters to watch. Over 168.85, I'd say that's very good action. Under 166.50 in the next few days, I'd say, oh, be a little careful here. All right, let's go to gold. Gold was up when I last looked. Gold is up 2.5 for 12.20. Really struggling. MACD turns up, nothing happens. Stochastic tries to rally, nothing happens. Weekly chart, MACD and stochastic are really, the MACD is terribly weak, and the stochastic is flat at 9%, and that suggests that any rally will have to do some testing before it can succeed, and the monthly chart technicals are very weak. That takes me to silver quickly. We'll do silver. I'm going to do a bunch of things here. Silver is a little bit better chart, but not by much, and it's trading up 0.05 or 15.40. And high-grade copper was earlier, it was bouncing a little bit. Yep, it's up 0.02, same kind of pattern. It's got the lowercase h. This is holding quite well so far, especially since the weekly is in its third week of trying to rally, but not breaking the lows or breaking above 2.86. It's at 2.758. Just let's keep watching it. It's not doing anything right now. Crude oil. This is going to be the big factor here. Crude oil was up quite strongly. Now it's up only 31 cents at 69.32. I've said it's in a kind of an arch formation. It'll break out if it can get to the 60.90 to 71.20 area. Would say, hey, that is good action. But if it breaks down under 68, not going to look very good at all. Weekly charts is stuck between 71s and the 66s for now. And then TLT, of course, we want to look at the Lehman 20-year T-bond fund pulling back here. Yields are bouncing a little bit. 119, down 29. If the TLT breaks under 118 and yields start to climb a lot more, that's a change of scenario that I have to take into account and start talking about it as rates then have a chance. The TNX has a chance to break topside. And why am I missing it? TNX, TNX.X. There it is. Trading right now up 0.26 after that peak E pullback in the daily chart. The 10-year is trading at 30.16 was the high of the 1st of August. It pulled back to 29.25, trading right now at 29.64. You can see the weekly chart just stuck in this arch formation that goes to a lowercase H goes to a lowercase m. But wait a minute, if there is a push above 30.16, if there is a daily close above 30.25, then we've got another situation here where the weekly chart is going to make an inside peak A, peak B, and maybe C and a D on the way up as the C, and I'm going to put in a rectangle formation right here. This is the first time I've been able to do it. I'm doing it right now, which says that there's a rectangle formation in the monthly chart at a peak C in the TNX, the 10-year T-note, and that says that there could be a chance that by September, there's a move above. Ooh, that's interesting, 31.15. That, I think, will impact the market because people are going to look at it and say, hey, why do I need any risk? I can start putting a little bit of money into really good yields in bonds. Hey, all right, here we go. I've done all that. Okay, quick question as we go to a break. Yes, the VIX index, of course, I'll look at the VIX index. VIX index trading right now at 11.17, down 10 cents. It hit 10.52 earlier today. I'm watching this closely, but so far it's gone from the teens into the double digits. This is very interesting. Almost went to single digit. I'll be back, guys, at 71.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, just to look, you remember we were talking about the peak D in the 10-minute Russell 2000 10-minute chart, the peak F of the 5-minute chart. We're now down in leg D on the way towards testing 1689.48. So not everything is in sync. We'll watch it. My contention today was that there's a chance, because of that Chapman Wave 5, that we might see the high on the upside earlier in the day, and then towards the end of the day, we start to see the selling come in. I don't know if that's going to be the case because of the rotation, but that would not surprise me at all. XLF is a question a number of people have asked about. Let's just go right there. The XLF, which is trading at 28.48, up 21 cents. This is the S&P Select Financial Spider Fund. The way it's held, the 9-period and 14-period moving averages in the monthly chart suggest that, yeah, we might be thinking, there you are. Cup formation is possible if this week the XLF, I'm calling this a leg F. I don't really, there's no other way I can count it other than the unconventional, the flat base, unconventional restart. I don't want to get into that right now. It's a possibility. Which says it can go a little higher, and eventually over a 5-bar, maybe a 7-bar period, there's a turnaround, and that turnaround plunges below the low that was made a few days ago at 27.68. I don't want to make it complicated. All I'm saying is it's acting well. The MACD is good. Stochastic is okay in the daily. The weekly chart stochastic has just pushed to 72%, and needs 82% for me to feel comfortable. And the MACD is just crossing positive now. And this is a single leg aim. Remember, we saw that in the monthly chart of the dollar. 1, 2, 3, 4, 5. This is 6 weeks in the dollar. We have 6 months of leg A to the upside. Hasn't taken it out to make an extension of leg A. But my thinking here is we've got to watch the financials. And if the yields are going to go high, it does help. It's not a direct correlation, but it absolutely helps support the financial. It seems that it has in the past, and it should do it again, the financial. So the question is, Goldman Sachs, is it a big move today? It's up 2.77. Hey, going back to the 200-period exponential moving average, peak E was made. This could be a leg F. Leg A in the weekly chart looks like the XLF a little bit. And only a peak C in the monthly. This says to me, Goldman Sachs will be a player when the really big move starts. Has it started already? Did we miss from the 218.89 low of the 2nd of July? It's up 20 points from here. No, 20 points is 10%. It's not a big deal to miss 10% of the stock if a stock is going to go to, in this case, the 280s to go to leg D, another 50 points high. It's another 18%. I must do a little bit of work, more work. We've missed our chance. We really had a couple of nice positions. Got stopped out because there was that nervous Friday that I had, and then Bank of America came out with really good earnings, and it just took off from there. Bank of America right now is trading up 14 cents at 31.66. It really hasn't had big moves, but just steady day by day. A couple of red candles. Mostly, I've got it again in leg F. It's the same chart formation. So wait a minute. If leg F, then that implies that financials would need to come down with yields coming down. And here we are looking at the yields acting very well, strongly, and the TLT acting weak. This makes the next couple of days very important. Why? Because there might be a position going on here where the XLF does have weakness, but it doesn't go to it doesn't take out the low that was made the beginning of July in BAC, Goldman Sachs, XLF. In fact, what it does is it just chops to the downside in a sideways fashion, making slightly lower lows and slightly lower highs until there is a big turnaround to the upside, and then they take off again. I don't know. Has this begun? That's the assessment that I'll have to be making. Is this a chance where you could buy one of the bank stocks and say, you know what, I'm starting a position here. I don't care if it goes down, because if it goes down, I'm buying here, and then I'm buying there, and then I'm buying every dip I'm going to be buying, because my monthly outlook is very positive. If it goes too deep down, that monthly chart could take a long time to get back. That's the only question I would have. So the answer is, maybe if you're really a long-term player and you're looking at this and saying, hey, that XLF really looks good, the S&P Select Financial Spider Fund, I think it's going to go to the 30.34 level in the long term to make the full cup formation. I'm going to start a position here at 28.45, but it'll only be the starter position. I'd like to get more between 27.50 and 27.20, and then I might just put a crazy bid below, and then I've got my positions, and I'm just staying in that position. That's another way of doing it. It's a way I might have to think. I had thought that was a position that we should take. I didn't stick to that particular formula. looks to me like this is not, it's a formula that I have to consider, because that long-term downtrend line in the weekly chart has 2750s as really important support, 2776 to 2750s in the weekly chart as a retest. That's not such a bad thing. $1, $1.50, but even $2, even an 8% correction here. If you're thinking bounce, 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 then it turns around and makes higher highs and higher lows as the weekly chart starts to make a kind of a funny shaped cup formation. All right, like a rectangle, going back to the top of a rectangle. All right, so that's that. I thought I'd just mention the possibilities. Question about the SOX index. So I don't think I've updated it. Yeah, then we go to the SMHs. SMH is exactly the same pattern. Right there, it is a leg E in the Chapman Wave Daily, a doji candle, kind of struggling a little bit. The MACD is good. Stochastic's okay at 83%. It's actually good at 83%, but not anywhere as strong as it was earlier in July. And the weekly chart is really just stuck in a range. And the monthly chart, I did a whole thing on the monthly chart for subscribers to my opening call over the weekend, and we'll just have to see, because this pattern with the oval says if there is a rally in the SMH is trading at 108.51 by, today's just Tuesday, well, it feels like Wednesday or Monday, Thursday. If by Thursday afternoon, you're trading, the SMH is trading at 109.80 or higher, I have to consider that there's a rally that's going on that really is dependent on the MACD in the weekly chart trying to get back above to make it positive, because it's been negative, and the stochastic has been negative at 71%. In fact, so is the weekly chart being pretty negative technically. So this extra move between the 107.50 to 108.50 to me is a little more than I expected, although we're still short at this particular point. Okay, so let me just give you parameters. 109.50 or 109.70 says, hey, this is really good action in the semiconductors. A pullback by Thursday or Friday below 107.10 to 106.80. That cushion, if it goes under that, that's negative. All right, did that. Yeah, I don't know if I can do that right now. Intel, this is looking at Intel INTC. Intel trading up 29 cents. Yeah, it's the same sort of thing. A lousy action. LRCX had a fantastic response to its earnings, and it gapped up, and then it went up huge to a peak E at 196.70 on the 31st of July. LRCX trading down $4.34 at 180.97, giving back those gains. I said they're very suspicious because the weekly chart was not good, and the monthly chart suggests it's not supposed to be 176 to be tested. I'll be right back. Basil Chapman, Tiger Editions, our Dow's at 155. Let's get there.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. Did I just hear a bop, bop, bop? Okay, we're back, and now let me just look at this here. The XLP, which is the S&P Select Consumer Staples Spider Fund, trading right now. Let me B, C, D, E. A, B, C, D, A, B, C, D, A, B, C. All right, so this looks to me like it's made a little peak C with a doji candle, pull back at 54.08 minus 26. Could have one more pop to the upside. Then you've got to be a little careful, but it's really good action in the daily. MACD's good, stochastics at 87%. That's good. I'd prefer 90, but it's 87. And the unbalanced volume is just dipping a little bit. Single leg 8 to the upside in the weekly after making an unusual peak B top in the 58, 59 area. Comes down to the 49s. Right now, we're looking at leg A in the monthly chart. So this is going to be something to watch, because if there's a rotation and the rotation goes into the select right here, the next select consumer staples, that's going to help another area. We've seen that in the IBB, where the IBB is now stalling a little bit, but it's been holding. We are still long a position in the IBB, the index, the NASDAQ Biotech ETF at 118.03 right now, had 120.06 high, and it's come back quite a bit. We were taking some off in the 119, 118 area, 116. Now we've got some, and I haven't added to the position because it's made a peak D in the weekly chart. How it closes this week is going to be really important, but it might be that that's part of this whole rotational aspect. So IBB, I had a question about, and Caterpillar. I did that, didn't I do it? Yes, I did Caterpillar. UTX, I didn't do. UTX right now is up 71 cents, 73 cents. At 134, we are still long from the 119. It's taken quite a bit off, but I haven't added to it because just kind of stuck in this range here. Very good, but not breaking to the upside yet. But that weekly chart might need another week of consolidation. So that's very important. Look at that weekly chart. Very nice action. So that's telling me that that should have been a clue to me that there was a chance that the Dow could, in fact, break above that 25,620, Yes, 25,520 to 540 area. All right, so now what we're looking at is another question came in about the XLI. This is now the industrials. So the industrials right now 0.73%. And this one I've got in leg E, pulls back, a peak E, and it's at 76.52. The high was made, the recovery high, not the all-time high, the recovery high recently in the daily at a peak E at 77 round number, no, 76.99. So that's going to be very important. So that's once again showing that this is almost like caterpillar chart, and the charts that have had this big choppy chop to the downside, lower lows and lower highs, all of a sudden trying to turn around. So I'm watching the industrials, because if there's that rotation into pure industrials, this is the XLI, S&P Select Industrial Spider Fund, that would say to me, you can get that rotation, and there's that cup formation potential in the weekly chart. So overall bearish, no, I've got bearish positions, but looking at the way the rotation has occurred, it says, you know what, right at this moment, the Dow and the S&P and the Qs and the IWM are not breaking, they're not showing signs of breaking down at all. They are trying to make higher highs. That is very important. What is really important is, I had a question in the den. Let me just get to this. I haven't looked at it for a couple of days. CX trading at 754, up 2 cents. Yeah, we missed buying this. I missed it. It was there on our list, and I didn't get it because it moved so quickly to the upside. Now it's having a high-level consolidation. I like this action. This is CMEX, Mexican Cement Company, trading at 754, up 2 cents. Yeah, MACD's good, stochastics holding steady at 88%. It just hasn't. I would like to realign the whole thing, see what I'm thinking, if it can go between 728 and 713, somewhere in there. Is that now a time to try again, to go to the upside? At this point, it's just holding very well. If you're long, stay long. I think it's made a leg D. Oh, yeah, 7.59 was 3 weeks ago. 7.60 by 1 penny. It's made an F/B in the daily. I really should call it a B, but the MACD and stochastic are just suggesting they're struggling right now to hold the gains. So there, 785 would be, that's what I had mentioned way back, that 785 would be my target if in fact was able to get above 725, 732. It just did that in 1 day, remember? So yeah, I'm looking at this and I'm saying nice action. So VMC, I don't know what we're talking about VMC here. VMC is trading at, whoa, took a dive. It's now up on the day, but boy, it has gone back. When we looked at it last, I think it was in the 129, 130s, went to 135, 134. Now it's trading at 116. Ooh, okay, that's a bit, I don't remember even why it's come up. Vulcan Materials. Was that something someone spoke about? Anyway, okay. Couple of things that we need to look at, because now it's getting really critical. I like to say that you've got to look at the charts and you can't listen to the news. But I also say very often that you need to hear, the market has to respond to news and take it as bad news. And the VIX index has to climb into the teens. And the futures, the S&P futures, need to open down like 10 points, try to rally, then close at the lows. That's a bear phase. We've not seen more than a couple of days in bear phases for a while. So the news at this particular point obviously is benign, even though it could at any minute flare up. But the market's saying, hey, I don't see anything here right now. I'm just the path of least resistance. I think that's Dave White's newsletter. This path of least resistance looks to me like a cork in water. It just keeps wanting to pop to the surface. So that's the moment. Now I'll tell you what I'm looking at. The only signs wouldn't be just technical. I would have to see the VIX index actually punch. And it can't just kind of walk there. It has to punch from 1114 right now with a day low of 10.52. At some point in the next coming days or the week, it has to punch into the 13s as there is bad news that market takes something that's said as bad news, and that bad news has to filter through the market, and it has to hold there, not for an hour or two for a buying opportunity. It has to hold there through the close. It has to hold there through the next day, and then it has to hold there for like a whole week. We haven't had that. Every time there's been bad news, it's been intraday, huge gap down, and then there's a big move to the upside. So here's a question that I've asked myself. I've had a couple of questions come in today. Let's just do this very slowly. ESU 18, I'm going to do it in every way possible. The ESU 18 is the current futures contract. That's the September, right? It's in a leg E, a big candle. We've had 4 big green candles to the upside. Just took right out the 28.49.50 high of the 25th. I'll do some work, and when we get back, we'll talk about what can be anticipated in this particular pattern. I'll be back.
My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So here we go. This is just something in the Dan Polo said TSLA pop on tweet goes Tesla goes private. Everything about Tesla says to even the consumer report that came out yesterday has Tesla, the S model, doesn't give it a good rating at all. Just a fantastic some of the things, and other things are just slop. And also the whole idea of using the screen when you're driving to try to find these different things. I personally find that very difficult. All right, here we go. 11.75, yeah, that is using the screen while driving. 11.75 up right now on the E-mini. So the S&P E-mini on the 10-minute chart has 2863.03 resistance, 26.2.15, and 2865 as very strong resistance, but it also has 2856 as support, right? 10-minute. Nothing in the 120-minute chart. It's broken out with very good technicals. The daily has 2866.25 to 2870, but I'm looking at this standard error, this red line moving down, and the yellow line in the standard error, this the deviation right here. This particular, the green goes to red, now it's yellow, and that daily chart says it's getting a little bit extended, but price is the determinant of direction, and the price right now has broken into the 2862s, so it's very close to those resistance levels. They might act as a magnet, but they could also be a very strong repellent. Weekly chart doesn't have anything at this particular, and the day well, let me go to the monthly as if it was ES continuous contract to see if there's anything there. Yeah, the weekly, which is trading at 2862, very much in sync, has 2843, which was taken out. Now 2876 is the next resistance level. 2867, 2870 on the E-mini continuous contract. 2962 on the monthly. So I'm saying there should be a lot of resistance coming up. We'll deal with that. We'll have to see what's happening. But I'm absolutely fascinated that the rotation has different stocks, like Triple M has just come up over 2 points, but it was acting so poorly. That rotation is absolutely key in this particular market. Hey, thanks for being here. Stay tuned for Steve and go to his website.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.